And welcome to another video review. Today is Tuesday, May 28, 2024. Let's find out what's going on the Forex economic calendar today. Overnight data were in form of the retail sales from Australia that were worse than expected, 0.3% increase. Actual number was 0.1%, but it's still better than the last number of minus 0.4%. We got some speeches overnight from the S&B board member Thomas Jordan, then FOMC member Bowman, FOMC member Meister, and ECB Schnabel. All of those people talk early in the morning. During the London session, there is almost nothing here, which is medium or high important event. Nevertheless, during the New York session, we got LMPI from Canada scheduled for release at 2:30. HPI composite from the US scheduled for release at 3 o'clock. German Buba Balz will give a speech at 3:30. FOMC member Kashkari will give a speech at 5 to 4. And at 4 o'clock p.m. we got the CB consumer confidence data from the US, and this is the key event of the day. The consumer confidence in the US is expected to decrease slightly from 97 points down to 96 points. Then we got the 2-year and 5-year note auction, and at the end of the day, 7:05, we got FOMC member Daly to give a speech for us. So as you can see, except the consumer confidence data scheduled for release at 4 o'clock p.m. Today, we don't have too much data that might be considered as game changers or high impact data release. So it looks like a nice steady session ahead of us. Nevertheless, we have to take a look at the technical situation of the different forex pairs, and as usual, we are going to start with euro dollar. For our chart of the euro dollar is showing us the signs of the strength after the bounce from 100 periods moving average around 1.0819. We got very nice consolidation here around 50 periods moving average, which was a little bit higher, around 1.0860, and now we got a breakout and we are heading towards the technical resistance located just where the bullish engulfing pattern was done, 1.0895. So this is the technical resistance, intraday technical resistance. If it is violated, if it is broken, then of course the almighty supply zone located between the levels of 1.0934, 1.0949 is next up for a test, or maybe even a breakout. Momentum supports the movement to the upside. Momentum is strong and positive, 65 points. Right now, there is still slide room to the upside. There is still slide room to the upside here on the chart. Everything looks very nice from the bullish perspective. Only a sustained breakout below 1.0840 into the technical support might change the outlook to more bearish. Let's take a look at the gold market. The gold market reversed from the highs at 2,449 after new all-time high was done. It's now trading below 50 and 100 periods moving average. You can see this bearish divergence here that was resolved very quickly. So right now we got a sharp turn to the downside in gold. And we can see that we are trading below 150 periods moving average already. So the next target would be somewhere here, as the last sell-off low was done, 2,324. So that's the temporary technical support, but it shouldn't be that hard for the bears to break it. Momentum had been trying to bounce from the extremely oversold market conditions, 24 points only. But despite the nice bounce from the lows, nevertheless it didn't actually work that well, and the market didn't broke above the level of 50 on the RSI, and now it is reversing lower as the downside movement is getting stronger. So the outlook for the gold is bearish, as the correction should continue. We broke below all of the Fibonacci retracement levels of the last swing to the upside. So right now, the main target for the bears is located in between the levels of 2,276, 2,290. So this is the demand zone. We should see bigger bullish activity around this zone as the bulls will defend their demand zone. Possibly some sort of the bounce might be in play as well. Please notice the fact that this movement to the downside looks pretty much intense and impulsive. So we might have seen the swing high already at 2,449 and that breakout below the demand zone would be the confirmation that we have the midterm to the short term to the midterm swing high already in place at 2,449. That was the gold outlook. Let's take a look at the US dollar to the Japanese yen. Not much is going on here. After the Bank of Japan intervention, we got the deterioration towards 151.87. Nevertheless, we already bounced back above 156. Local high was made at 157.21, and now we are consolidating around the 50 periods moving average on a 4-hour chart. Momentum just tested the level of 50. Let me just mark this level on the RSI chart. There you go. And as you can see, well, we are still above the level of 50, which means the sentiment is positive and the bulls are in charge of the market. However, this recent deterioration towards that level of 50 might not be actually that bad for the bulls, because they have a chance to catch a breath and then resume the up trend. The next targets for bulls, because the overall outlook for the US dollar to the Japanese yen is still bullish. So the next target for bulls are 157.98 and of course 160.20. But we need to start moving higher soon, right? Otherwise, the situation will not be that great. Let's take a look at the market we haven't seen for a while. I want to take a look at the Ethereum market. Let's see if we can grab some. There you go. That's the Ethereum market. Let's switch to the daily time frame chart. So after the Ethereum spot ETF was approved just recently, last week, the market moved very quickly to the upside, back towards the level of 4,087, which is the next technical resistance and the next target for the bulls. So the good fundamental news are charging the bullish rally. We got this situation here with the zones. Look at this. Very well established market, very well established zones on this market. 2,820 technical support, 4,087 technical resistance, swing high for the 2024. In the background, there is definitely some sort of the uptrend still valid, still developing. So one more thing that you might have missed on this chart is, of course, this very nice, let's say, some sort of the triangle, some sort of the wedge pattern. So let me just explain what is going on here and why we got this very big breakout to the upside. As you can see, we've been doing this sort of the movement. Let me just zoom out because we need some more space here. This is what I'm talking about. Something like that. More or less, it looks something like this. And when the price has been squeezing in between those two lines here, you know that it's time for a breakout. But you never know what side the breakout will be. Eventually, because of the uptrend in the background, you got this corrective pattern here during the wedge creation, but then you got the very nice breakout to the upside. So you squeeze the spring and then you release, and the spring bounces very quickly back to the upside. We got some signs of the exhaustion of this upside movement because of the extremely overbought area right now has been hit. So the levels of roughly 3,900 would be extremely overbought even on the daily time frame chart. So we can see some sort of the deterioration, some sort of the correction from those levels here. If we grab the technical support located at 3,725, it might act as the technical support level. It used to be technical support, so it might still act like this. Nevertheless, it might be a weak one, so please consider the fact that it might be very easily violated. Nevertheless, we're still trying to move higher. The bulls are still trying to move towards the 4,082 technical resistance, 87, sorry, technical resistance, and the swing high. So the outlook remains still bullish. The outlook on the Ethereum remains bullish, and we should see more upside soon. And last but not least, as usual, is a Bitcoin. And what is Bitcoin doing? Well, it doesn't actually looks good because it still develops the wave 4. The bulls are not ready to break above the new supply zone towards the new all-time high, and it should be seen better on the 4-hour chart, as we still, let's say, trading in between two moving averages, 150 periods, of course, moving averages on the 4-hour time frame chart. So as long as we do not have any definitive movement either to the upside or to the downside, the outlook remains, well, still bullish and still impulsive, but this wave 4 creation takes too much time right now. And please be prepared for the possible cancellation of this structure and the continuation of the horizontal trade on the Bitcoin. We need a breakout higher. We need strong impulsive rally on the Bitcoin above the level of 70,000 to continue the movement to the upside. Otherwise, impulsive scenario, impulsive wave progression will be most likely invalidated. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.